When it comes to retirement, most people focus on sunshine, golf courses, or where the grandkids live. But here's something most people overlook: taxes. And trust me, the difference between a tax-friendly and tax-hostile state can cost you thousands every year. Some states don't tax your Social Security at all. Others will gladly take a cut of your pension, 401k, and even your groceries. So before you pick your perfect retirement destination, let's look at how different states treat retirees when it comes to taxes. But first, what does it actually mean for a state to be tax-friendly? Not all taxes are created equal, especially in retirement. When we talk about a tax-friendly state, we're usually referring to 5 major categories. Income tax, especially on Social Security, pensions, and retirement accounts. Property taxes, which can add up quickly for homeowners. Sales taxes, including on groceries and meds. Estate and inheritance taxes, which impact what you leave behind. Even fuel taxes can matter, especially if you drive a lot in retirement. The right state can shield most of your retirement income. The wrong one can chip away at it month after month. So now that you know what makes a state tax-friendly, let's look at the ones that aren't. Some states are rough on retirees, taxing nearly every form of income while piling on high property and sales taxes. As of 2025, the worst states for retirement taxes include California, Connecticut, Minnesota, Nebraska, Rhode Island, Vermont. Most of these states tax Social Security, don't offer many breaks on 401k or IRA income, and have some of the highest property taxes in the country. In Nebraska, for example, you'll pay taxes on nearly all your retirement income, plus deal with high housing costs and minimal exemptions. But not all states are that bad. In fact, many fall somewhere in the middle, and some give you decent tax breaks without going fully tax-free. Not every state is a tax paradise, but many still offer decent breaks for retirees, especially when it comes to Social Security and retirement income. Let's break this down. Tax-friendly states. These states don't tax Social Security and offer solid deductions or exemptions on other retirement income like 401k, IRA, and pensions. They also tend to have reasonable property and sales taxes. Here are some of the most tax-friendly states in 2025. Texas, no income tax, no Social Security tax. Pennsylvania, exempts all retirement income, including pensions. Virginia, generous retirement income deductions. Illinois, Alabama, Delaware, also solid picks for retirees. Moderately tax-friendly states. These states still give some tax relief, but it's more limited. They might only partially exempt retirement income, have higher property taxes, or add in higher sales or fuel taxes. Examples of moderately tax-friendly states in 2025. Arizona, no tax on Social Security, but partial tax on retirement accounts. New York, offers a deduction but taxes some retirement income. Oregon, no sales tax but higher income taxes. North Carolina, improving but still taxes some IRA and 401k income. So while these aren't the worst states to retire in, you'll want to do a little math before settling down. Still, there's a group of states that rise above the rest, offering retirees the biggest savings across the board. Let's look at the most tax-friendly states in the U.S. These 7 states are the gold standard for retirement taxes in 2025. Most of them have no income tax, low property tax, and little to no sales tax. But how do they stack up when it comes to housing costs and overall affordability? Let's break them down. Alaska. Alaska has no income tax and no state-level sales tax, making it a tax haven on paper. Retirees even get an annual oil dividend. The average home costs about $377,000, and rent for a one-bedroom runs around $1,297 per month. But the cost of living is high at $130.2 due to shipping costs and energy prices. If you're a nature lover who doesn't mind cold weather and isolation, Alaska offers peace, scenic beauty, and low taxes. But you'll want a solid budget to manage everyday expenses. Florida. Florida has long been a retirement hotspot, and for good reason. The state has no income tax, which means your Social Security, pension, and 401k income are all tax-free. The average home price in 2025 is around $390,000, with one-bedroom rent averaging $1,690 per month. While housing can be pricey in coastal areas, The overall cost of living is close to the national average at 102. You'll also save on essentials like groceries, which are exempt from sales tax. With warm weather, no income tax, and senior-friendly amenities, Florida continues to be a top destination for retirees. Nevada. Nevada offers more than casinos and desert views. It's also a smart financial choice for retirees. The state has no income tax, which means Social Security, pensions, and retirement account withdrawals are all tax-free. The average home price in 2025 is about $454,000, though this varies widely between Las Vegas and smaller towns. A one-bedroom apartment rents for around $1,400 per month, and the cost of living index is 104.6, slightly above average but manageable. There's also no estate or inheritance tax, making Nevada attractive for retirees looking to preserve their income and leave more behind. Georgia is one of the most underrated tax-friendly states for retirees. It doesn't tax Social Security benefits, and seniors over 65 can deduct up to $65,000 of retirement income per person. That includes pensions, 401k, and IRA withdrawals. The average home price is around $335,000, and a one-bedroom apartment rents for about $1,608 per month. Georgia's cost of living is well below the national average at 91.7, making it especially attractive for fixed-income retirees. Whether you're drawn to Atlanta's suburbs or smaller towns like Athens or Macon, Georgia combines warm weather, generous tax breaks, and affordable living. Mississippi. Mississippi may not be flashy, but for retirees on a budget, it's a hidden gem. The state does not tax Social Security, pensions, or 401k and IRA withdrawals, making it one of the most retirement-friendly states in the U.S. The average home value is around $190,000, and properties typically go under contract in just under a month. A one-bedroom apartment rents for roughly $987 per month, and the cost of living is only $83.5, one of the lowest in the country. If you're looking for low taxes, low housing costs, and Southern hospitality, Mississippi delivers in all three. South Dakota. South Dakota is one of the most tax-friendly states in the country, and not just for retirees. The state has no income tax, so Social Security, pensions, and 401k withdrawals are all tax-free. Property taxes are moderate, and there's no estate or inheritance tax, which is great for long-term planning. The average home price is about $320,000, while rent for a one-bedroom apartment averages $1,100 per month. The cost of living index is 92.2, just below the national average. With wide-open spaces, low taxes, and a strong sense of community, South Dakota offers retirees both savings and simplicity. Wyoming. Wyoming consistently ranks as one of the most tax-friendly states for retirees, and for good reason. There's no state income tax, so Social Security, pensions, and retirement account income are all tax-free. Property taxes are low, and the state charges no estate or inheritance tax. The average home price is around $368,000, and rent for a one-bedroom apartment runs about $1,050 per month. With a cost of living index of 97, Wyoming is both affordable and financially smart. Add in stunning natural beauty and small-town charm, and it's a peaceful, low-tax option for those who value independence.